Are you in the best KiwiSaver fund? In late October, we got our last read for 2025, so in this video, I'll share the funds and providers with the highest 1, 3, 5, and 10-year returns. Kiwis have invested a total $135 billion into KiwiSaver. That's up $18 billion from where it was a year back. Morningstar highlights 3 factors that drove KiwiSaver returns in the past quarter. First, inflation pressures have continued to ease. Second, major global central banks have continued to cut rates. And 3, risk assets have performed well. We've seen the OCR come down from 4.75% a year back to 2.5% today, which is great for more growth and aggressive funds. These are heavy in risk assets like stocks, and when rates come down, the cost to service their debt is falling, which is great for profits. So overall, KiwiSaver funds have done fairly well over the quarter. Looking at the numbers themselves, the aggressive and growth funds outperformed over the quarter in line with what we would expect with falling rates. Aggressive funds have an average annualized return of 9.7%, growth 8.7%, balanced 7.2%, moderate 5.1%, and finally conservative at 4.3%. This is why KiwiSaver providers generally encourage younger investors to be in riskier funds, as in the short term, anything can happen, but in the longer term, they tend to outperform. In terms of market share, ANZ has the most KiwiSaver funds under management with 17% market share. This is down from 18% half a year ago. When it was published, they were significantly underperforming their peers. They continue to be the largest, followed by ASB, Fisher Funds, Milford, and Westpac BT. The fastest growing provider, once again, is Kernel, with 138% more funds under management than this time a year back. Sharesies is a fast climber as well, up 79%, and Quarter up 68%. Pi funds saw a drop in their funds under management, which against the backdrop of positive investment returns, reflects people leaving their KiwiSaver funds for other providers. A shocking number to look at is the estimated annual fee revenue. A year back, KiwiSaver providers earned a whopping $918 million in fees. Now, it's over $1.1 billion. This is absolutely insane to me. $1 billion every year is being taken out of our retirement accounts, and it's increasing by a whopping $200 million a year. This is absolutely something the government should be putting caps on, as it represents over 0.2% of New Zealand's GDP. It sounds small, but as a compounding charge, it isn't, and some providers are making an absolute killing. With that out of the way, let's now take a look at the returns. These are all compared on an after-fees basis, but before tax, as that's different for everyone. In total, there are 25 providers and 331 funds compared by Morningstar. As mentioned earlier, KiwiSaver funds have 5 groupings by risk: conservative, moderate, balanced, growth, and aggressive, from lowest to highest risk. Default funds are the 6th category that sit around the balanced mark of risk. Comparing the default funds first, Fisher Funds had the highest quarterly returns of 6.1% and 1-year returns of 11.7%. Over 3 years, BNZ takes the crown with 12.7% annual returns. Simplicity came in just behind with 12.6%, and Booster with 12.4%. In terms of fees, Superlife are the lowest here with just 0.2% charged per annum. Westpac, on the other hand, is the highest, charging 0.4%. They're also the largest fund with a little over $1 billion invested. Moving along now, we have the conservative funds. Over 3 months and 1 year, ASB topped the list with returns of 3.7% and 8% respectively. This is the largest fund with nearly $3.7 billion managed. Over 3 and 5 years, we have Key Street's conservative fund. They came up second behind ASB in the short run and third over 10 years, despite having a smaller pot of just $33 million. And finally, over 10 years, we have Milford's conservative fund with a return of 5.2%. With the lowest returns, we have ANZ, BNZ, and AMP, all with returns under 4% per year over 10 years. Comparing fees, Booster charges the highest fees of 1.11% a year. This is for a fairly mid-pack fund. Generate come up second, charging 1.09%. However, their after-fees returns have been commendable over 3 months, 1 and 3 years. Other providers charging in excess of 80 points include Pathfinder, Milford, and Mass, while the average for a conservative fund sits at 0.62%. Now let's take a look at the moderate funds. The The short-term frontrunner here is ASB's moderate fund with a 5% return over the quarter and 10.1% over the past year. They also came up third in the 3, 5, and 10-year returns. Over 3 years, BNZ topped the list with annualized returns of 10.2%. Over 5 years, Milford's moderate fund topped the table, earning 6%, and over 10 years, Generate tops the list with commendable results over 1, 3, and 5 years as well. A secret performer here is Mass, which is in the leaderboard across all time horizons. It's also important to highlight that of the large banks, BNZ and ASB came up second and third over 10 years. The fund manager charging the highest fees in this category is newcomer Aurora at 1.25%. This is followed by Booster, Generate, and JMI, all charging above 1.1% a year. The average for the category is just 0.81%. Now we're at the funds sitting in the middle, balanced funds. Over 10 years, Milford's balanced fund comes out on top with returns of 8.6% a year. Over the quarter, ASB came out on top, earning 6.4%, with Pi and Kernel sitting just behind. Key Street takes out the top placing over 1, 3, and 5 years with their socially responsible fund. At the bottom end of town, ANZ's balanced fund sits either at the bottom or very near the bottom across all time horizons. With some of the highest fees, Booster and Fisher funds have two of the worst performing balanced funds across all time horizons. So make sure to do your research, as there are a few consistent underperformers in the balanced fund space. Charging over 1.1% include a selection of Booster, Fisher, Generate, Invest Now, JMI, and Pathfinder funds. The average for the category is just 0.75%. Now we've reached the growth funds, the category with the most funds invested, over $42 billion, roughly a third of all Kiwisaver funds. We have a bit of a mixed bag here this quarter, with newcomer Evidential Growth coming out on top over the quarter with a 7.9% return. Over 1 and 5 years, and a runner-up over 3, we have Key Street's Growth Fund. Beating them over 3 years was Simplicity. And finally, over 10 years, the legendary Milford Active Growth Fund comes out on top with returns of 10.8%. They struggled over the quarter, however, coming in 22nd from 30 funds. And at the other end of town, ANZ's Balanced Growth and Growth Funds have the lowest returns over 10 years. Aurora and Invest Now have some of the lowest returning funds in this category across several time horizons, all charging fees in excess of 1%. So like before, when looking for a growth fund, definitely look at some of these figures and the fees they're charging. Past performance certainly doesn't suggest high returns in the future, but it does speak to the quality of their investment team and their ability to read the market and respond. Simplicity charges the lowest fees at just 24 basis points, whereas Aurora, Booster, Fisher, Generate, Amova, Some Invest Now, JMI, Milford, Pathfinder, and Key Street all charge above 1.2% a year. The average for the category is just 1%. And finally, we reach the aggressive funds. These take the highest risk approach to investing. Again, topping the table over the quarter is the newcomer Evidential, with returns of 9.3%. Over 1 year, Key Street's High Growth Fund takes the top ranking. Kernel slips in 2, topping the 3-year, second in the 1 year, and third in the quarterly returns. Over 5 years, Superlife's High Growth Fund has done well. And finally, over 10 years, Booster's Socially Responsible High Growth Fund tops the table with a 10.7% return per year. This is a relatively new category, so there aren't many funds that have been around for 5-10 years. Charging the highest fees here are Booster and Key Street, both above 1.3%. The average for the category is 0.93%. So that rounds out the funds that invest in several types of investment. Morningstar also take a look at single sector funds. These are less diversified and more targeted in their investment approach. Starting with cash funds, these invest in very low risk deposit accounts. Fisher funds top the tables for their 10-year returns of 2.9%. They were joined by Mass and Superlife. Next along is fixed interest. These are investments that pay an interest rate like bonds. Many of these funds haven't been around for 10 years, but of those that have, Key Street's fixed interest fund has generated the highest returns of 3.5%. Superlife's New Zealand Bonds Fund joins them with a return of 3.4%. Along from there, we have international shares. Global stock markets have done pretty well recently. The S&P 500 is at an all-time high. the FTSE is too, even New Zealand's NZX50 is just 1% off its peak. Topping the table over 10 years is OneAnswer's Sustainable Shares Fund, Superlife's Unhedged Overseas Shares Fund, and KeyStreet's International Equities Fund. Quarter's Clean Energy Fund earned an impressive 33% return over the quarter, while Amova's ART Fund topped the 1- and 3-year charts. Looking at share funds that are hedged, Colonel's Global 100 Fund topped the quarter and 1-year tables. Focusing now on just American stocks, there are some pretty exceptional returns here. Over 10 years, Superlife's US Large Growth Fund has been an absolute beast, taking the top spot across nearly all time horizons. Over 10 years, the fund has generated an annual return of 17.6%, which is huge. Bringing the focus back to this part of the world, Superlife's Australian Resources Fund has generated a return of 13.5% a year over 10 years. With the recent rise in the price of metals, they also took the top spot over the quarter, earning a return of 24.8%. Over 1, 3, and 5 years, it was Australia's financial fund that topped the list, owing to the strength of their banking companies. Looking at the property funds over 10 years, the OneAnswer Australian Property Fund has come out on top, while over 5 years, it was the Superlife's Global Property Fund. And finally, we have the miscellaneous funds, which have an unconventional Kiwisaver investment focus. There is no point in comparing these, as they are all so different. Of particular note, Quarter has a Bitcoin fund that made a 93% return over the past year. Superlife's Emerging Markets Fund suggests that some of the less developed countries have had a pretty good year, up 26%. If you're looking to improve your investment portfolio tracking in 2025, make sure to check out ShareSite. They have one of the best trackers on the market, allowing you to get a better view of your investment returns through capital gains, dividends, and currency. You can even track your Kiwisaver funds through the app, allowing you to see all of your investments in one place. It also has a range of useful reporting tools, including one that does all of your fifth tax calculations for you, saving time and potentially money. If you sign up using my link down below, you'll get 4 months free on their annual plan. If you enjoyed this video, please make sure to like and subscribe. It really helps the channel and pushes me to create more content just like this. You can also check out some of my other investing content somewhere over here. Thanks for watching, and I look forward to catching you on the next one. Cheers.